Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Indraprasth Gas Limited, which is a strong business and the valuations have become attractive, but whether you should buy here or you should wait. Let's understand this. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I start with the analysis of IGL, here's a small request to kindly support me on Patreon, and once you do that, you'll get better videos on YouTube, and I'll try to analyze the stocks in a more detailed manner with your support. And once I have 100 Patreons, we'll start with an education course on investment for no additional fee on YouTube. Now about IGL, it was established in 1998 and they provide compressed natural gas or CNG, and they have CNG stations all across North India, especially in New Delhi and NCR region. Headquartered in New Delhi and leader in this space. So they are probably the only player and the leader in this space, with some subsidiaries working in Maharashtra as well. Have distribution across India, especially in metros, and New Delhi, Maharashtra are main regions. They also distribute cooking gas to many parts, so that needs to be taken into consideration as well while investing. And the market cap of the company is around 24-25,000 crore. If you look at the financials of the company for this third quarter, or sorry, the September quarter numbers, and then you look at it, probably this is the the December quarter numbers, and this is sales are up by around 29%, whereas if you look at the profit growth, it has been a whopping 47% growth, a zero debt company with a very good ROE of 20% and an operating profit margin of 24%. So on the numbers front, it is a top class company and yet coming at major discount. If you look at the performance of the stock has performed well and is up 67% in the last 7 months, have crashed post that by around 40% in the last 1 month with all the crisis going on in India and globally. So this is probably coming at a discount of 30-35% from the highs. One has to take that into considerations. Numbers have remained robust and have produced strong return ratios, as I just mentioned, and it is kind of a monopoly business that you're looking at. It's not a business in which a lot of are there or a lot of competition is there. So in that regard also IGL looks perfectly fine. There have been consistent growth in terms of the stock price as well as in terms of the performance of the company, and there's a decent dividend payout ratio of the company. So why I believe it is a buy on decline. First of all, it is a monopolistic business which is extremely robust. So everybody would require compressed natural gas, and once India comes back onto road after the lockdown and hopefully after 14th of April, these companies would do well, whether it is IRCTC or something like an IGL, MGL, and so on and so forth, which have the business of taking people from one place to another. So if you look at a business of IGL, they produce compressed natural gas, which goes into autos and trucks, and they are the moving parts of India, or the cogs in the Indian wheel or the economic wheel. So this is perhaps a very good business to get into once things normalize. That is the essential part. The valuations are very attractive at around 18 to 20 times earnings, and it is a huge consumption play. People talk about FMCG or consumer goods, etc. This is also a consumption play, purely because of the fact that, as I mentioned, that they are the providers of fuel to autos and all the vehicles all across India, especially also in the four-wheeler segment. Many people have CNG cylinders in their four-wheelers. So that is why one can consider IGL a monopolistic business, and very few such businesses are there currently in the market. So what needs to be done? So what needs to be done? I believe you can accumulate over the next 3 months, and probably on each declines or between 330 to 270 levels are very good levels to get into. I'll discuss about the technicals after this slide with what could be the levels. Keep track of numbers, have a good 7 year view at least on the stock and the company, because we don't know when this recession would end. We don't know when this whole saga would end. There have been eruptions of COVID-19. There have been eruptions of coronavirus that is taking place in many parts of different parts of the world, and so we don't know once the lockdown ends whether we'll have another lockdown or not. We don't know anything right now. It is a complete uncertainty on all parts, and that's why the VIX is high in the market, and that's why people are unsure of getting into the market at this point of time. So, in that regard, I believe that buy in a staggered manner and have a good 4 5 year long term view. By that time, the economy would revive and these stocks would perform at its best. Uh, it can become a multi-bagger from these levels and have less than 5% of your total portfolio exposure. We hope to see it at a decent level once you have a situation where things come back onto track. These companies will certainly do well. In terms of the technicals, which I was talking about, there's strong support between the 300 to 330 levels. So these are extremely strong supports. Many times the stock has gone to those levels and have come back. If that does not sustain, then the next support comes in at 270 levels. Right now, the stock is trading at around 335, 340 levels. Probably another 10 12% decline, 15% decline are very good opportunities to get into. So what you do is buy in a staggered manner, buy in a manner in which you put in 10% on each decline. So you put in 10% on each 10% decline, or 10% on each 5% decline from say 340 350 levels. So you get in one tranche right now, and then at 315, then at 300, and so on and so forth, and you'll have a very good price to get into. So one can buy in this range of 320 330. The 200 DMA is around 380 rupees, and it can still fall 20 25% from the time you end up buying. So you exhaust all the money and probably your average ends up being 285. You think it's a pretty good 280 285. You could still see the stock at 220. We don't know, but the charts, as I look at the charts for the Nifty, it looks like we could have made another top at 9,000, and we could be heading lower. Excuse me. So in that sense, don't put in all the money right now. Hold your horses, hold your you can say dry powder ready for those declines. There could be another sell off coming up in a few days time. So take that into consideration. Buy in a staggered manner and you'll make a good amount of money in the stock. So this was my video on IGL. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. And thanks a lot for watching.